Hi students, welcome to Radhakrishna Tech. Today we will discuss about journal entries on acquisition of business under purchaser book. So, and also we will calculate purchase consideration. So today we will discuss about this. We will calculate the purchase consideration and we will put up in a journal entries for those calculations in the purchaser book. Okay, we will take some few examples and we will do this. Later on we can work on the problems. Okay. So first thing I will put up a sum here. So after, based on that we will start discussing on. So what I will do, Cat Limited. So he is a purchaser of Mouse Limited. So he is a seller or vendor book. So now what I will do, I will put a balance sheet here. Balance sheet of Mouse Limited. So here liabilities, assets. Okay. Hope you understand this. Based on this, I will put up a journal entry over here. Okay. So amount. So first thing I will put capital. Capital 2 lakh. Okay. Then creditors 65,000. Then bank loan some 30,000. Okay, this is my total. Then I will put some outstanding expenses, some 10,000. So total. So here computer, this is all my asset side. Computer some 40,000. Machinery 80,000. So here how much I have? 2 lakh 60, 2 lakh 60, 2 lakh, 3 lakh 5,000. This is my total. So machinery 80,000. Then furniture 25,000. Then debtors 60,000. Then bank account. So this is just a basic journal entries. For that I am putting these amounts. Okay. So how much we have? 41 lakh, 1 lakh 80, 3 lakh 5,000. So what we will do, we'll put 50. So 50, 50, 90, 170, 195, I'll put 10,000. 3 lakh 5,000. So what I will now, he is telling the Mouse Cat Limited agreed to pay 4 lakh. Okay. 4 lakh as PC. So already they have given that 4 lakh they are going to pay. So Cat Limited is going to purchase Mouse Limited. So Cat Limited is agreed to pay Mouse Limited 4 lakh. This will be under like this: cash 1 lakh, then equity 2 lakh, debenture some, you can say 1 lakh. So Cat Limited is going to pay Mouse Limited 4 lakh, but under net payment method. This is already they are given it, right? So this is just a net payment method, as we discussed in last class. Net payment method this is. Suppose they are not given this any items, we have to calculate a PC. If they are not mentioning any items in the problems, you should calculate based on net asset method. So 4 lakh. So the question is, calculate PC and pass journal entry in the books of Cat Limited. Okay. So see, first I am just going to explain this sum here. So Cat Limited is going to purchase Mouse Limited, but Cat Limited agreed to pay Mouse Limited 4 lakh rupees. That is paid based on this: cash 1 lakh, equity in 2 lakh, and debenture is in 1 lakh. Okay. So total 4 lakh. So these are all the liabilities and assets of Mouse Limited. This is a valuation. So they are not mentioned anything in the sum. They are not mentioned that the assets will be taken under this much value or market value, less than this value or above than the book value, or liabilities also. They are not mentioned anything. So they agreed to take as it is, whatever it is here, based on the book value. So now all these entries should be passed. Now this entry should be passed in purchaser book, that is Cat Limited. So first thing we have to do a purchase consideration. We have to calculate a purchase consideration. Based on that, after that we can post our journal entry. Okay. So I'll just put up a purchase calculation. So already they are given the PC calculation of purchase consideration. We no need to do because they are already mentioned in the sum itself. So now we will put up a journal entry. Before that, passing journal entry also, we should know whether they have paid more or less than your net asset, because based on last sum we have discussed that in our last class, if they are paying more than a net asset, then it will be a goodwill. If they are paying less than net asset, it will be a capital reserve in the books of purchaser company. So now we have to think whether it is in a goodwill or capital reserve. Okay, for that case we have to calculate first net asset. What is the net asset of Mouse Limited? So net assets of Mouse Limited. So total asset value, total asset 3,05,000, right? Less liabilities. So as I told you, we are not supposed to take capital. Excluding capital, we will take all these three items because this is a current liability or other current liability. So it does not include any capital, and in the sum also they are not mentioned that we should not take certain liabilities or assets. So we will take all these three: 65 plus 30 plus 10, 60, 31, 105. So 1,05,000. So reduce this value. Your net asset will be 2 lakh. So your net asset is 2 lakh now. Whether it is a goodwill or capital reserve, how will you come to know? A formula is that for if you are paying more than your net asset, PC is more than your net asset, then it is a goodwill. If it is a less than your net asset, then it is a capital reserve. So what is my PC here? PC is 4 lakh, right? 4 lakh minus 2 lakh. So 2 lakh I am paying more, right? So under this it is a goodwill. So I am paying more than my net asset. So it is a goodwill for me. You understand, right? So total of your asset less your liability minus that, you will get your net asset. It is a 2 lakh. So in 2 lakh, if it is more, if you are paying more than your net asset, then it will be considered as goodwill. If it is more paying, if you are paying less than your net asset, then it will be considered as a capital reserve. So now we'll post in a journal entry. Journal entry is very simple. So don't, I will tell you the entries how it is to be posted. You can post accordingly. So first thing, always your debit, credit, then journal. In the books of what? Whose books is this? In the books of CAT Limited. So what is your basic principle? First thing, all your assets are coming from B Limited to A Limited. Sorry, from Mouse Limited to CAT Limited. So when an asset is coming in, your basic golden journal rules. Debit all your expenses. So real account what? Real account, nominal, personal account. So this basic category of your accounting. So in nominal account, debit all your expenses, credit all your income. In real account, debit what comes in, credit what goes out. In personal account, debit the receiver, credit the giver. So your fixed assets is what? Your fixed assets is real account, right? So real account, what is your golden rule? Debit what comes in, credit what goes out, right? So all your assets are coming in. So what you will do? You will debit, or you can use this one more rule also. When your asset is increasing, it is a debit. When your asset is decreasing, it is a credit. Liability, when your asset is increasing, it is a credit. When your liability is decreasing, it is a debit. You can use in that way also. This is a simple trick. If you go in golden rule, it will comes under real account. If you normal, if you are wrong, logically you are thinking, so when your assets is coming in, you have to debit always. When your asset is going out, you have to credit it. So same way, liabilities vice versa. When your asset is crediting, going out, you should debit. When it is coming in, you should credit it. Now from some Mouse Limited to CAT Limited, assets are coming in. So simple, all your assets. So you can tell computer. So board is not enough, I will use other section also. So please make a note down on this. Okay. So computer account, what you will write? All are taken in book value. So 40,000. So simple it is. Missionary account. Just transfer all these items. 80,000. Then furniture account. What it is, 25,000. Then debtors, because this one of the problem will be coming into your examination. So easily you can score 5 marks or 6 marks in this. Debtors 50,000. So they are taking bank account, bank cash also they are taking. Bank account 10,000. Okay. Now total of this what? Next your liability. Now all you debited. Credit assets are coming in, you are debiting it. Liability is also coming into your new books. So when it comes in or when it is increased in your books, it is a credit amount. So creditor account. So it is basically credit side. Okay. So what is 65,000? Then bank loan 30,000. Then one more thing, what you have, outstanding expenses. So it is 10,000. Okay. So now what you have done, you have paid a PC. So what you have paid, 4 lakh rupees PC. So vendor account. So vendor account, see why I am giving you here vendor account means vendor is also what? it is a liability. So for Mouse Limited, he has to pay to Cat Limited. So he is paying 4 lakh rupees. So I am directly giving a credit for that. Okay. One more entry, offset entry also I will post it. Okay. Vendor account, what you will say? So it is 4 lakh. Credit, bank, this all based on your balance sheet, and this is your PC nothing but your vendor account. I am giving 4 lakh because I have to pay him, right? 4 lakh. Now I'll put up a as soon as I do it, for your understanding, I'll put up a offset entry, because as soon as you have to pay it, right? How you will pay to your Mouse Limited through bank, right? So you post a journal entry, bank account 4 lakh. Then vendor account, this is journal entry. Vendor account debit to, it's a credit amount for us, because cash is going out, your asset is decreasing. Whenever your asset is decreasing, what you will do? You will put it in credit side, right? So it is in credit. When your asset is decreasing, you are putting it in credit side. So vendor account 4 lakh. So this is got offsetted. See, when you are, see, this is a simple example. When your liability is increasing, you are credited. When your liability is decreasing, you are debited, because it is going out. So how it is going through? It's going through your bank account. You are paying that 4 lakh liability, right? So 4 lakh, sorry, instead of 4 lakh, because already they have given it, right? Bank account or cash account, 1 lakh. Then your equity, so 2 lakh. Then your debenture 1 lakh. So here your asset is getting decreased, you are credited. These two are your liability account, I mean to say capital account. So whenever the capital is increasing, it is a credit. Whenever it is decreasing, it is a debit. So you are increasing your capital by giving 3 lakh to Mouse Limited. So one or the other day you have to repay them through equity or debenture. When they are asking, you can they can sell it over, or if this valuation increase, they can sell it in future whenever it is. So this equity 2 lakh, debenture 1 lakh, bank account 1 lakh. So this vendor account is getting offsetted here itself. When your vendor account increased 4 lakh, when it decreased 4 lakh, it is decreased through all this mode. That's it. So now one thing you have to see. This for understanding, immediately I posted this entry. When you come to this entry, all your assets came in, all your liabilities came in, your liabilities including your vendor payable also you have posted. But there is a net of difference. What your net of difference is this 2 lakh. So you are paying more than, means after this netting off, you are paying more than your valuation of Mouse Limited, that is 2 lakh. So when it is increased more than your asset, then it will be 2 lakh, it is a goodwill, right? When it is less than your net asset, it will be capital reserve. So goodwill always what it is a asset account. So now it is a goodwill means asset account. What you will do? Goodwill account, asset debit. So 2 lakh. That's it. It's very simple. This is a basic journal entry. When your asset is getting increased, debit. When your asset is getting decreased. When your liability is increasing, credit. When your liability is decreasing, debit. So here also same way. You are paying your vendor through this all this modem that already given in a sum. You can just extract that detail and post it here. That's it. So these two are your capital or liability. When it is increase or decrease, increase, right? So you are putting in credit side. So bank account, your 1 lakh you are paying through cash, right? So it is your cash is an asset. When his asset is decreasing, you will post it in credit side. So that also you have done it. Okay. So this is how you will post your debit, your journal entry. It is very simple. Bring all your asset journal, bring all your creditors or liability side. The difference will be goodwill or capital reserve by paying your how much you are agreed to pay your PC. So when you have to post your PC also here, because you have to show in what mode you are paying to your vendor account, to your seller, to Mouse Limited. So that amount also you should show. So now after showing this also, I can show you one more thing here. So you have posted your journal entry. Now you have to show your balance sheet. In our examination, they will ask you to post a journal entry and display your balance sheet of Mouse Limited. They will ask you. Now we have already posted. This is Mouse Limited balance sheet. This is the journal entries posted in Cat Limited books. Based on this data, we can easily bring up a balance sheet of Cat Limited, new balance sheet. So I will just rub these numbers and I will transfer this journal entry into balance sheet and I will show you. Okay, I hope you have noted this down. So first item I will tell you. So what you have, computer account 40,000, it is an asset, you will put it in asset, 40,000. So now this balance sheet is under Mouse Limited. Cat Limited. Now you are in purchaser book, you are posting, right? So machinery what, 80,000. Then one more item what you have to do is furniture 25, debtors 50,000, bank account 10,000, all you will transfer there. Furniture 25,000. Then your debtors is 50,000. Later on I will tell you, if it all is are in book value, so direct amounts are coming. If they will tell that you are taking at market value or less than 10%, more than 10%, then it will not be exactly based on your previous Mouse Limited account. The numbers will get changed. So bank account 10,000. So one more new item added in your purchaser book, that is in Cat Limited book. So what is that? Goodwill. So 2 lakh it is. So goodwill is always what? Asset. So I posted in asset. First creditors and all will bring it. Creditor account 65,000, right? So put it in 65,000. Then bank loan 30,000. Then outstanding expenses 10,000. So now you have new. One more thing also you should consider here. So one more thing also you should consider here, equity and debtors. These two are new capital to Mouse Limited. So you have to bring, so this is a capital, right? Capital means liability side. So equity, instead of putting this in capital name, you can put it as equity. Equity what? 2 lakh. Then debenture what? 1 lakh. It is all in your purchaser book, Cat Limited book. 2 lakh, debenture 1 lakh. So now you have done all entries, you have posted, whatever you have it, you have posted there. Okay, just total it up and see. 40 plus 80, 120, 145 plus 50, 195 plus 205, 4 lakh 5,000. Okay, here also you can total it up. 10,000, 3 lakh, 60 plus 30, 40, 405. Two lakh, 1 lakh. So you are bringing all your, just total this also. If you total, this is getting knock off. Is this getting knock off? So 2 lakh, this is 1 lakh. So 40, 80, 25, 50, 1, 2 lakh, 4 lakh 5,000. 4 lakh plus 20. Then your outstanding 65, 30, 90, 105, 405. That's it, right? So cash is going out. So I think one more thing we have to do it. So 2 lakh plus 1 lakh, 3 lakh, 3 lakh 60, 3 lakh 90, 95, 405, 40, 80, 40, 80 how much? 40, 80, 120, 120 plus 145, 195, 205 plus 2, 405, 405. That's it. So it's very simple. Debenture 65, 10,000. That's it. So 405, 405. So bank account debiting, bank loan and credit. Okay, you understand, right? So this is very simple. First, they will give you seller books account. So based on that, you have to calculate your purchase consideration. If they are not given in the sum, you have to calculate it. If they already given it, then use that as a for calculating your whether it is a goodwill or it is a capital reserve. Then go to your journal entry and post accordingly. So all your assets and liabilities net off will be a goodwill or capital reserve. Then vendor account. So when you are netting it off, we are netting it off based on your cash account, equity, debenture. That's it. Then you are transferring that there. So this is our first sum. So this is a class 2 first sum basic journal entry I have given here. So we will discuss basic journal entry based on our imagination number for 2 or other more than 2 or 3 sums. We'll understand this journal entry, then we will go to the actual illustrations. Okay. I hope you understand. If you have any queries here, you can check with me and comment in the channel itself. Okay. Thank you.